Hey guys, Michael here. Are you looking to make a property investment and you're not sure how to find the best deal? Well, this video is for you. So we'll teach you what makes a great property investment, and also we'll teach you what to look for and the traps to avoid when investing in property. So let's go. If you don't know about us yet, so we are PropHero. Our mission is to help you build wealth and achieve financial freedom through property investments. And what we do is that we help you find, buy, and manage the best investment properties using data, AI, and a network of property coaches. So what makes a great investment opportunity? Well, in a very simple way, it's two things. Number one, it's capital growth, and number two, it's cash flows. On capital growth, what you want to make sure is that you have strong underlying demand for the property that you're buying. You want to make sure that there is limited supply risk. You want to try to buy below market price. And finally, you're looking for improvement potential, like a granny flat, for example. Second thing is cash flow. And this is critical, guys. If your property generates negative cash flow each month, you won't be able to build cash and buy the next investment property. So what you want to look for is high rental yield, growing rent, low expenses, and low vacancy rate. All right. So there is, of course, more to this that you could look into. At PropHero, we have what we call our data cube. It's over 200 variables that we look at in order to find the best property investments. So we look at macroeconomics, supply, demand, property characteristics, and so on and so forth. You don't need to go into this right now, guys, but just for you to know, there is a lot more that you can do to make sure that you're making a great deal. So let's compare two opportunities that we have seen recently in the markets that roughly cost the same, about $500,000, but were very different when it comes to investment potential. So on the one on the left, the rental yield was almost 5% versus about 3% for the one on the right. So like big difference here, but that's not all. Capital growth potential was significantly different between these two properties. They were located in like two very close suburbs, but one is just amazing to invest in and the other one not so much. Finally, rental expenses. The one on the left, much cheaper to operate, which of course helps with your cash flows. So what does this mean for you guys? So first, cash flows. On the left-hand side, nearly $7,000 positive cash flow per year. On the right-hand side, negative $1,000, which means that for the next 10, 20, 30 years, this property will cost you cash at the end of each month. Second thing is capital gain. On the left-hand side, you can hope to make $19,000 capital gain per year. On the right-hand side, only $5,000. And you may think, well, okay, well, that's not too far away from each other. But look at these guys. After 10 years, on the left-hand side, you could make over $250,000 profit. And on the left-hand side, only $44,000. The one on the left is 6 times more profitable than the one on the right. So that's just massive, guys. So it just like shows you the importance of choosing the right investment. To make this more concrete, we're going to show you some properties that we have found recently for our clients that were just amazing. For example, this one in South Queensland that we found for our wonderful client, Mary. Price was $445,000, so she only paid like a $45,000 deposit. Yield was 4.7%, monthly cash flow plus $370, and vacancy rate extremely low at 0.6%. What we loved about this property was one, the location. Just a super attractive suburb with very high capital gain potential, and within this suburb, just one of the best streets. Second thing that we really liked was the size of the land, nearly 700 square meters, which gives you like long-term potential to build more on this property. And then of course, positive cash flow and all the due diligence checks that were ticked on our side. So no flood risk, no fire risk, no noise, etc., etc. Another example is for David and Sydney. We found this property for them, still like near Brisbane, $520,000, 4.5% yield, positive cash flow, super low vacancy rates. And what we liked here again, amazing location, perfect condition. So this property already had tenants and very good tenants. So really no stress about that. And it was in an area where rents keep going up and up and up each year after year. So again, you're sure about your cash flows. You're sure that you're making a great deal, just a perfect opportunity. Now let's look at a property that wasn't so good that we didn't select for our clients. Similar suburb, kind of like similar price, but negative cash flow, pretty low rental yield, and pretty high vacancy rate. In particular, what we didn't like about this one was one supply risk. What you can see here, guys, is that in this area just here, right, this is about to be developed, right? And well, if you have more supply, then it means that later down the track, your property value might go down. Second thing we didn't like, of course, is the negative cash flow, right? Well, again, each month for the next 20, 30 years, this property is going to cost you cash. So for us, that's a big no-no. And finally, something that many people don't look at is, as part of the due diligence, this was actually in a bushfire risk area. And well, this may not seem like that much of a big deal right now, but think about it, right? If you own this property for 10 or 20 years, the risks that something bad happens is actually pretty high. So for us, these checks is part of our due diligence, and for this, just for this would have been like a big no to buy this property for our clients. So let's recap. Number one, when you want to invest in property, think both about capital gains and cash flows. Number two, due diligence is critical to ensure there is no red flag on the property. Fire, noise, flood, etc., etc. Finally, guys, if you want to learn more, or if you're interested in investing in property, or if you just want to learn about the market, just feel free to reach out to us. We love property and we are here to help. Thank you. Bye-bye.